the reality of the world that we're living in now, the market that we're investing in. It's just heightened uncertainty, heightened volatility. That also, especially over the mid to long term, leads to better opportunity. Part of the reason we've got the polar bear and the logo at Aretec, we want to manage and navigate through that volatility and uncertainty and come out ahead of that and deal with these more harsh and uncertain conditions and make sure over the long run we not only survive but absolutely thrive.
This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth.
All right, we're back. We're back for a special midweek update here just because we've had a crazy weekend, crazy couple days in the world, starting to see some craziness in the markets as well. So we just wanted to get ahead of it here, just get on top of things. I think we're going to stick with our regular cadence here with a Friday video. We just wanted to talk a little bit. So we're starting to get questions. We're looking at what's going on out there. And I think even from Friday morning when we filmed our last video, we hadn't even talked about the geopolitics and Iran and the war that's going on. So wanted to give our take on that, give you a little bit of a midweek update here. Probably will be a little bit shorter than usual, but yeah, let's just dive into things here, Greg.
Yeah, there's a lot of developments over the weekend. Obviously markets close on the weekend. Markets are obviously open now. Monday was actually a relatively calm day, and actually stuff was going up, gold, energy. Today we're getting a little bit of a down day, but kind of as a starting point, just want to get your take from a market standpoint, what we're starting to see out there.
Yeah, I mean, I think this Iran conflict was something that had been talked about for the last little while. Tensions had been heating up. I don't think the markets were necessarily factoring or pricing that in because nobody knows. These are these kind of just unknowns, just potential black swan or out of left field events. But markets were starting to see that there was that risk based on the rhetoric. And then obviously that's something that hits everybody by surprise. And I was doing my thing on the weekend and just seeing the news flow pop up over the weekend, and lots going on there. And I think what we saw Monday, just in terms of how markets reacted, they were actually relatively calm. I mean, they did open down, but you saw things like oil, because of the disruption, oil was way up and still is up here midday Tuesday. Gold was up on Monday. Some of the defensive types of stocks, which we've talked about a lot, were bumping up, and other areas were down. Some of the riskier areas directly affected. I think what we saw Tuesday here to start the day is pretty much a risk-off environment across the board, where we saw markets down in the morning at least pretty significantly. Who knows how volatile markets are these days? That could be wiped out by the morning or wiped out by the end of the day. But we saw things down pretty significantly, probably anywhere from 2 to 4% out of global equity markets. And then so far at around 1 o'clock, maybe about half of that has come back, but we're kind of mid trading day, mid session. So we'll wait and see. But we're certainly seeing a short term, more volatile reaction to markets. This war in the Middle East, the conflict in Iran, that looks like it's widening out. Unfortunately, we're seeing things recover at least a little bit so far, which is good.
Yeah, and it's interesting. So Monday, Tuesday, obviously 2 days, only 2 days, so not a lot of data points. But Monday, they opened really down, started to recover. Today, they opened really down, starting to recover. So what we're seeing, Will, is are we seeing a little bit more of an emotional reaction to markets, or maybe more of like a longer-term fundamental change?
Well, I don't think this is a long-term fundamental shift in the market dynamic or anything like that. I mean, markets, this kind of news, markets are going to react emotionally. I mean, even seeing it today, the very short term, the day traders, the algorithms are coming in and starting to take control of the market, and that's what happens in these really volatile events. But markets short term on this kind of news, they're going to be a lot more emotional, quick to move. They're going to react to things very, very quickly. But as things stretch out into the medium, into the longer term, markets tend to be much more reasonable, rational, grounded in reality. and it's something we want to watch and keep an eye on. And we're monitoring everything. We're looking at this. We're looking at what makes sense to in portfolios and positioning. But generally speaking, we've got pretty good positioning. This is a theme that we've been talking about for a while, probably a year and a half at least, is the heightened geopolitical uncertainty, just heightened chaos that's going on out there in the world. And so we have a lot of positions that maybe not every single day or every moment, but are pretty well positioned for this type of environment.
Yeah, so we talked about, I mean, today you have one of those days where everything's down, but longer term, what's working is kind of more gold, more defense. We've talked about aerospace and defense, energy. So, and I think we talked about this more last week. It's just more of like the old-fashioned traditional businesses seem to be doing better in this sort of environment.
Yeah, the commodities for sure, although we've got a weak patch there today. But it's just, again, that's one day of a whole risk-off sentiment. That's not changing the trend, although a little bit painful to see. But we're definitely, with this going on, very likely to see heightened volatility. But we've seen this playbook before in this sort of new market, new world order, where there's all kinds of chaos, instability that's brought in by through the US, through Trump. And frankly, even this time last year, kind of March, April, is when the whole tariff situation started to unfold. It was the whole liquidation day that happened in April. Even earlier this year, seems like a month ago, we had the whole, or maybe it was a bit more than that, whenever it was, the whole Greenland situation as well, more geopolitical stuff, or the Venezuela situation. And it's like you get these quick responses, but I also think it's something that if markets are not liking what's going on, at the very least, some of the messaging and the rhetoric on this starts to change and shift to try to calm markets. So I wouldn't be surprised. The situation is definitely fluid. I wouldn't be surprised if the Trump position on this starts to shift if markets are not digesting or taking this in well.
Yeah, so do you see, Will, I mean, it's still early days, but when we kind of stretch this out longer term, do you see any, from a purely market standpoint, any potential opportunities right now that investors should be thinking about?
I mean, I think it's probably a little bit early for that, just because this has only developed over like the last couple days. But these sort of events, when they do happen, they tend to be the best opportunities overall. And I mean, just think of last April that it kind of sizzled up through March and then came to a boiling point with that whole tariff big board in April by about mid-April or even before that, like a week later, markets were bottoming out, and that was an incredible buying opportunity, incredible run up in markets, and there were all sorts of pockets and areas of the market that are on sale. So we're not quite there yet, but you get that feeling. We know events. We don't know that this exact event, but we know events like this are going to happen. There's going to be sell-offs, corrections, crashes, major market events, and dislocations, and those just tend to provide the absolute best opportunities. So it's something we have on our radar, we're watching, we're looking at. I think you're starting to see that, where if names and positions that are really, really high quality, or areas of the market are high quality, and they start to go down 10% or more, and not stuff you've seen pull back at any point in recent memory, that certainly starts to put it on our watch list and radar and say, all right, this is oversold. There's a potential opportunity here, and we look to make moves and adjust and shift accordingly.
And really, when you go back to probably around COVID, every kind of market event since then, it's been a pretty fast correction on the way down, but also a pretty fast correction on the way up. Obviously, no one knows if that's going to be the case here, but that's been the trend over the last little while. And I think that lends itself well to our process and how we manage, because the evolution and the landscape is just so dynamic.
Yeah, I think also some of that, it depends whether it's more structural, what's going on. I mean, this is one of these external shocks. It would probably be closer to something like the tariffs or COVID, but probably not that bad. When you have something more structurally like a real recession or inflation, and that's what we saw in 2022 as example. I think those can be longer and more prolonged and sort of drag out overall. But I do think this is one of these that's an external shock to markets. That being said, it probably brings back some memories. It was probably this time just 4 years ago you had the whole Russia-Ukraine conflict that started, and not that in and of itself was what dragged the markets down. There were structural issues from COVID and the supply chain and inflation, but it disrupted all of that. So this could be something that leads to, certainly it is something that's leading to more uncertainty and unknowns, but it doesn't necessarily mean that, oh, this is just a blip on the radar. To your point, we don't know where this is going, and that's why we want to look at both sides of this. Like, we're looking for opportunity or looking to see the bright side of things that might be there, but at the same time we want to manage the risks and protect the downside, and understand that this might be this could be more prolonged and more risk out there, and just manage things accordingly.
So what would your message be to investors and clients? Well, there's tons of headline noise out there. Like, everywhere you turn, you're seeing different things as it relates to their portfolio, their money. What's kind of the messaging to investors at this point?
Yeah, I mean, stick with the process. Markets right now are reacting very emotionally to this about what's going on, and there's a quick flight to safety and a quick almost algorithmic type of reaction to what's going on. It's not something that we want to panic about or be emotionally reacting to. We want to respond, govern ourselves accordingly. So, I think this is just the reality. We've talked about this many times. The reality of the world that we're living in now, the market that we're investing in. It's just heightened uncertainty, heightened volatility. That also, especially over the mid to long term, leads to better opportunity. And for the most part, that's what we've seen, is these kind of geopolitically driven events. They cause a short-term shock and disruption in markets, but it's not a long-term structural change to the economy, to earnings, to fundamentals, to what's actually driving the markets on a bigger picture. So I think it's just another one of these disruptions. Doesn't mean it's not unsettling or unfortunate for that to be going on, but we want to manage through that. And ultimately, part of the reason we've got the polar bear and the logo at Aretec, we want to manage and navigate through that volatility and uncertainty and come out ahead of that and deal with these more harsh and uncertain conditions, and make sure over the long run we not only survive but absolutely thrive. So I think this environment plays well to our process, plays well to how we invest and manage money tactically, but also how we're strategically positioned for this. So we're in good shape overall. I know a little bit of a bumpier period. I think we will be back to unpack this more on Friday or later in the week. So this is just a quick update because it is a crazier time, and hopefully markets are bouncing back for the rest of the day and the rest of the week, and it's just some short-term volatility. So as always, we want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. And we'll be back with everybody soon.
Thanks, Will.